All right, so you all just saw my full executions here on the NASDAQ futures. Now I'm actually going to sit down here and I'm going to do a full breakdown and review for you guys and basically just really show you all the key elements that came together for me to be able to take this high probability long. Okay, so let's get straight into it. We're going to be starting right here on the daily time frame. Okay, this is always going to be your first level of analysis, obviously after the weekly time frame candle projection. And in my opinion, nothing is more important than what that daily time frame candle is saying. Okay, and obviously, we're going to be starting with this specific daily candle here, okay, Friday, right? And coming into Friday, we see that we have a very deep decline here on Thursday, drawing into fair value in this discount imbalance here. And what I mean by fair value is I'm going to go ahead and take my fib and I'm going to use this swing low as opposed to this one, because from this swing low, this is what originated this very aggressive movement higher up into new all-time highs, okay? So I'm going to take this low to high. Okay, here's equilibrium. Do we reach equilibrium? Yes, we do. What's happening at equilibrium here? Fair value is being yielded to larger funds. Okay, not only are we trading to fair value, but we also traded down ever so slightly into a discount. Discount what? What's the first key level below equilibrium here? Well, we have this key daily imbalance here. Okay, so we now have a higher time frame level that we're working up off of. What do all A plus trading setups need to be A plus? A higher time frame level to be working off of. So we have that here. Boom. Now, I have this blue shaded fair value up here annotated because it actually played a significant role in my trade here today. So I'll get more into that in the lower time frames. Okay. So basically just using the low, midpoint, and high. All right. So basically, looking at the daily time frame here, we're going to be anticipating taking longs. We're not looking at this first drop down and saying, oh, it's time to short. We're looking for that continuation, baby. It's a breakout. No, that's what they want you to think. As soon as it drops down here, they got you right where they want you. Now, let's say, okay, we traded up here and then declined just about right here, somewhere here, still in a premium. Yes, absolutely, I'd be looking for continuations on shorts into this imbalance. However, coming into Friday, what do? We open, trade below the opening, and look how far down Thursday traded. We already reached a discount. So what does Friday do? On bullish days, we look for what? Opening, trade below the opening, trade higher. What is that? That's our classic bullish power of three. Accumulation, manipulation, distribution. Okay? So now that we have all this derived from the daily time frame, let's go ahead and drop down to the hourly time frame. Okay? So I already mentioned this discount and balance here on the daily time frame. Yes? Now, there's something else that's very specific that played a key role in framing my bullish bias for today. Not only are we trading down to a key daily level, but if you take a look here, you're going to see these relative equal lows. Now, the first thing most of you probably are going to think is, oh, well, yeah, it's sell-side liquidity. It's relative equal lows. It's deeper than that, okay? It's not just simply, oh, we have relative equal lows. That's a key low. No. We're going to go ahead and take our fib here, just like we did on the daily time frame, low to high, okay? Where's equilibrium? Right here. What do we do here? We consolidate. That is key because why? What do we do around equilibrium? We consolidate and accumulate orders. So this is accumulation, this consolidation here. Okay, here's our 8:30 news driver release. Manipulation, distribution of longs. Okay, so what is the actual purpose of us trading below the opening here? So right here, we have midnight opening here, and then we recalibrate at this 8:30 opening. What do? Without an indicator, we're already oversold coming into the equities opening, right? Because we're below midnight opening and we're below the 8:30 opening. Whenever we're below multiple openings, that is oversold without using any indicators, okay? So the purpose of us trading below these openings is, number one, obviously to blow out previous daily low, also to reach into that daily imbalance that I mapped out for you, but more specifically and more importantly, to clear this key level of liquidity. A very, very large amount of sell stops are resting below these lows here. Now, what I'm about to show you here is sold to you for hundreds and hundreds and hundreds of dollars, but I'm giving it out for free right now, okay? These relative equal lows here hold a great deal of importance. Why? Where's equilibrium? Okay, we have equilibrium established here. What is the first significant pool of liquidity below equilibrium? It is right here. So because of this, this is our discount liquidity pool. This holds a lot more importance than, let's say, this liquidity pool right here. And we see it trades to that beautifully. Now, we now have the first two most important key elements to an A+ trading setup. We have liquidity taken, and we have a key daily level traded to. Boom. Now, what brings this all together is, what are we drawing towards? What could we be targeting on the opposing end? Well, here's Thursday. What did it leave behind in this very large decline? Well, I mean, most of you already have noticed, this is going to jump out to you, this very large sell side imbalance, buy side inefficiency. So I'm going to go ahead and put this right here just so you can see it. Okay. So this was our main draw on liquidity today. We're going to draw our fib. Okay. And this is what you really focus in on. You really want to be focusing in on longing in this blue shaded area here, right? And then exiting in the premium, in the red shaded area here. All right. So we have our premium target labeled out. Okay. We have everything from the higher time frame derived. Now we're going to jump down to the lower time frames and give you a deeper analysis on, basically the good stuff. So before I do that, I'm going to go ahead and map out. You're going to take note of this inversion hourly imbalance. And the reason why I'm mapping this out is because this is what I was actually using real time to trade it. Okay, so this is like our quote unquote support. This is our idea of support and resistance. So we look at the high, midpoint, and low as support levels on the opposing end, because we trade through it, close above it, trade back down into it to do what? Accumulate more long positions, and then we continue higher. Okay, so let's go down to the 15-minute time frame. Okay, so here's our 8:30 opening here. Okay, we have a very large wick to the downside here. We have all the levels delivered. Okay, that's our manipulation. We consolidate, and then we have this expansion. Okay, this is key here. Following this expansion, we have this small retracement here. What are we retracing down into? Well, this right here is going to be our classic 15-minute fair value gap. But more importantly, it comes back to what? This here is an inversion gap. Once we trade above it, into it, down, we're looking at this as a key support level, right? So there's no need for price to aggressively attack the midpoint or the low end of this imbalance here. That's why you see it just trade into the upper end and then trade off. This is not hindsight. This repeats over and over and over and over again, okay? This signature in price right here, this is how you, so a lot of you ask, oh, how do you know how deep it's going to trade into the imbalance? Look for higher time frame inversion gaps, such as the example I'm giving you right now, okay? So what do? We wick down into the 15-minute imbalance. Where does the body end up? Above. Okay, it wicks down and then comes the whole way up and closes where? Just above the low end of this inversion gap. That's a very key signature that we look for in price action, using these inversion gaps, drawing towards this higher time frame target. Okay, so with this being said, let's go ahead and drop down to the 5-minute time frame now. All right, so 5-minute time frame. I want to bring to your attention that yes, we were drawing towards that hourly imbalance above market price. Did I trade up into that? Barely. I didn't even, not even significantly within that imbalance. My main outlook was we have yet to reach this Sunday opening, which acts as our magnet. Just like I talked about with equilibrium, what resides at Sunday openings? Fair value for larger funds. So this acts as a magnet. Whenever you see price get this close to a new week opening gap or Sunday opening like this, okay, there's a 99% chance it's going to reach it, even if it trades off like this, okay? It's very rare you'll see an instance of it getting this close to it, trading off, and then never coming back up into it. It's a magnet. It yields fair value for larger funds, and it's something you want to always have annotated on your chart. Okay, so this right here, okay, this here is going to be our 5-minute imbalance within that 15-minute fair value gap. We trade down into that, okay? This is the level we're using. What is this right here? It's a breakaway gap. What's a breakaway gap? Well, think of it like a car revving its engine and then skirts off and it leaves those black lines on the pavement. Is it coming back to that? Hey, well, let me come back to you and then go to where else? No. It has a destination it wants to get to. It's not coming back. It's going. Okay? Maybe it makes a little pit stop at a gas station like it does here, but it's not coming back to this. There's no need for that to take place. In fact, if this was traded to, there would be no longing setup for me here today, okay? along with the balanced price range here, where the body's closing once again. We wick down into the short-term discount, which I'll get into on the lower time frame. We wick down, where do the bodies end up? We close at the low end, close at the low end, close at the low end, and then we expand into what? New week opening gap and that hourly imbalance that I noted on the hourly time frame, right? So let's go to the 1 minute time frame. So the thing about price swings is a lot of people have it mixed up with, drawing their fib. Most people are going to want to draw their fib from this low to the high, and they'll be like, oh, wait a minute, it didn't reach a discount. You're wrong. We're not using this low here. Anytime you have now, let me get this out of the way first, because this is very important to lock in. What matters is, are we in an optimal time of day when we're looking at stuff like this? In this case, yes, we are. We're within the New York kill zone, 8:30 to 11 a.m. We're within our kill zone here. So with this price swing expansion, we're going to be using the second leg that was formed. This is going to be our stage of distribution here. We're going to be using that low to the high that was created. This is our short-term dealing range. Within this dealing range, what do we have? What's this right here? This here is going to be our short-term low in the form of short-term sell-side liquidity. So what do? We drop down into an optimal trade entry, 62% retracement level, right? That's our optimal trade entry, and we're clearing sell-side liquidity in optimal trade entry while we're trading down into the hourly inversion gap. I'm taking that every single time. That is too high probability not to take, okay? So all those factors coming together is what makes this such a good setup, okay? And one more thing I should mention is, remember this blue shaded area here that I said that was important, okay? We're going to go ahead and we're going to mark out the quadrants here, okay? So here's the high to low, okay? Here's midpoint, okay? Now let's go midpoint to the high. This here is our upper quadrant of the daily fair value gap. This here is a key level within that daily time frame imbalance. So not only are we trading down into the inversion gap, but we're also trading down to a key quadrant of the higher time frame level. Now, if this is all going out one ear and the other, it's fine, okay? You just need more experience and you'll get it one day. But, it just doesn't matter if you show up every single day or not. So with all this said here, I'm not going to bore you guys anymore. Let's get into the meat here. So after we clear sell side liquidity here, okay, after we clear these relative equal lows here, what do we have? What's this down close candle right here? This down close candle is important. Okay, you can look at any 1 minute down close candle and be like, oh, that's an order block because it's a down close candle for that move. No, you're wrong. If it does not have the elements that I'm about to give you right now, it is not a high probability order block. This down close candle right here, this 1 minute, yes, this 1 minute candle, this is a high probability order block because we're trading down into a key level here. And with this down close candle, it drove us down into these short-term sell stops. What happens after this takes place? We have an expansion higher. Do we have a market structure shift following this order block formed? Yes, we do right here above this swing high. Did it create an imbalance? Yes, it did right here. Every single thing that I just said right here, this is that order block that you're looking for. And what does price do? Price remembers the opening and the high. And it protracts to that. To do what? Accumulate more long positions. So we trade down into it here. Boom. That is our reaccumulation of longs. And this is exactly where I took my long position on the futures here, as you guys saw in the clip earlier. And target number 1, new week opening gaps / Sunday opening right here. And then I got covered just about right here at the low end of the hourly imbalance. So I hope this one helped. I hope it was insightful. If it was, hit the like button, comment, whatever you got to do. Be safe.